Why are the stock market and the crypto market so strong? And how long can they keep this up? Let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. Lawyers are happy, so let's get on with it. Oh, and by the way, I am going to be hosting a Zoom call this week for my Hey Ed WhatsApp group, where I'm going to be introducing an opportunity that I am in that's making me 1% per day, and it does compound. So I'm going to be revealing that program to my group. If you think you would like to sit in on that, shoot me an email. My email is always in the description below, and I'll send you a link to join my Hey Ed WhatsApp group. It's free, and you could sit in on that Zoom. So 1% per day, 7 days a week, compounding. Are you interested? Okay, so the stock market and the crypto market has been on a tear. So let's start by taking a really quick look at what they're doing, and then we'll talk about why they are doing it and whether or not they can keep it up. Okay, so let's start by taking a look at the Dow Jones Industrial Average, and the picture says everything for me, right? Just look at this move the market has had, especially in the past couple of weeks. If you go back and look, now that's a 1 month chart. So let's look at the 3-month chart. Okay, so last time that I did a video about the markets, I told you to watch the top part of this channel here. And when I made my last video, it was just sticking its head above the channel. I'm telling you guys, this technical analysis stuff works. There's a reason why technical analysis works. And you have to start to learn how to read chart patterns. And by the way, my rule of thumb, remember, I used to be a trading instructor. So my rule of thumb about channels, and channels are one of my favorite patterns to look for, is that the longer the channel and the narrower the channel, the bigger the move will be when that channel finally breaks, and the more sustainable the move is. So we just broke out of a very nice, long, tight channel. That's why I think that this rally is going to go on for a while. But before we get into the why, let's take a look at the crypto markets. Okay, now, of course, when we are judging the health of the crypto markets, the first thing we always want to look at is Bitcoin, right? Bitcoin is the blue chip. It is the bellwether in the crypto space. It really sets the tone for the entire crypto space. Well, as of this recording, and right now it is late afternoon on July 6th, Sunday night. Happy 4th of July, by the way, to everyone. And Bitcoin is trading at 109,000 and change. Let's take a closer look. Okay, now this is the 1 year chart. Okay, so you can see the Bitcoin is just a hair away from making well, it's at an all-time high right now, guys. And I'm not going to bother pointing out to you the different patterns in here. Let's keep this short and sweet. Okay, so Bitcoin is at a new high. Okay, now the real magic number, in my opinion, is still that $110,000 level. As of this recording, we are $394 away from which is nothing for Bitcoin, right? But if we can get above that 110,000 level and stay there for a day or two, then we're off to the races. Then 120 is in the bag, and then we're onward and upward even from there. So if you have Bitcoin and you've been tempted to sell it, you might want to, tough it out for a little while longer here. I get not financial advice, do whatever you want. I'm just, food for thought. All right, so let's take a look at a few other cryptos. Okay, so how about the next darling among the crypto enthusiasts out there, the XRP. XRP, as of this recording, is trading at 228. Again, that's a 1 year chart. Again, pattern is looking strong. Well, I want to go back a little bit here on this, guys. You see this little scare that we had here back in June? It did not last very long and quickly recovered. Now, one of the edisms that came out of my trading class when I was an instructor was that you always judge the health of whatever it is you're trading, whether it's a stock or crypto or a bond or anything, by the quality of their pullbacks and the quality of their recoveries. Okay, so, and it kind of makes sense, right? So if a stock has a big sell-off and then it does not really rally, it kind of bounces around there, that tells you people aren't really looking to buy, the dips. They're not looking to take advantage of weakness. There's something structurally wrong with that thing that you're trading. But when that thing that you're trading recovers quickly, that tells you that there's a lot of loyalty to that stock or that crypto. That means the street is using any kind of dip as a buying opportunity. And that's what we're seeing in all of these brand name cryptos. The street is viewing any kind of weakness as a buying opportunity. And let me throw in one more consideration for you to throw into the mix, okay? It is summertime now, right? It is 4th of July weekend as I'm recording this. And this is when the markets are traditionally soft. This is the time of year when the markets are most likely to sell off. Well, we're not seeing that happen, not in stocks and not in cryptos. And that brings up another edism, and that's my theory of relativity, which veterans of my channel, you've heard about many times, the theory of relativity. So when you're a period when the market should traditionally be soft, but is strong, that's a very bullish sign. All right, so let's get to why these markets are strong right now. Well, it starts with the retail investor. Across the board, markets are in a buy the dip mode. Retail investors have poured over $155 billion into the market in this past quarter. Now, if you're thinking, where are all these retail investors getting all their money? I thought everyone was sucking in. Well, listen, there is a large period of time there were a lot of people who were putting money to cash because they were fearful, primarily because of the policies of the last administration. So a lot of money has been sitting in cash by a lot of retail investors. Well, now they're feeling more confident and FOMO is starting to kick in. So that's the first thing. The retail investors have really been stepping up to the plate. Next are the institutional investors. Institutions are doing the same thing. They're stepping up as well, and they're starting to feel the FOMO. You can kind of see it in Bitcoin, by the way. And these are some of the reasons why the institutional investors are feeling confident. Number one is the easing trade tensions, revolving around these tariff issues. There's been a 90-day pause on the lion's share of these punitive tariffs. So the street likes the idea that there's a big pause going on right now in the tariff data. That takes a big roadblock, off the chessboard. Roadblock, chessboard, you know what I mean. Next, we have to throw in the robust economic and labor data. New jobs grew by 147,000 in June, dropping the unemployment level to 4.1%. Okay, that was better than the street expected. Next, technology and artificial intelligence is powering a lot of gains at the Magnificent Seven tech stocks. I mean, we have Apple, Microsoft, Nvidia, etc. Now, you might think that's a minor detail, but it's not. The lion's share of the move in the markets in general for the past several years has been all because of the Magnificent Seven. The Magnificent Seven right now really is the driving force behind the stock market. So what happens to them will influence everything else. And then you have the market positioning for positive Federal Reserve action. More and more, the markets are expecting the Federal Reserve to start cutting rates sometime during the year, probably in the fall. And there's nothing that the markets like more than cheap or free money. Now, there are a few more things, but I want to respect your time. So just wrap this up with one more thing. That this rally that we've been seeing in the stock and the crypto market has not been limited to just, a few sectors. This is a broad rally, and that's what you want to see. You want to see the proverbial rising tide. So the street people are feeling bullish in general, and optimism is contagious. So I think that we are in for a strong market for the foreseeable future. No doubt there are going to be days when the market's going to be down, but we are in a buy the dip mentality in the markets. And this is going to go on for a while, at least through the end of the summer, probably at least until the end of the year, barring any kind of black swan event, of course. I mean, if something disastrous were to happen out of the blue, then all bets are off. That's why they call it a black swan event. Okay, they're unpredictable. But short of something like that happening, I think you guys out there should be enthusiastic. Please like, subscribe, and ring that notification bell. Ed Anderson, live from Minnesota, signing out.
Copy that.